All right, let's talk about trading. Today, we're going to cut through all the noise and get right to the heart of it, learning how to decode the pure language of the market. We're going to explore how to listen to what the price itself is trying to tell us, using a really powerful approach called price action trading. So does this look familiar to you? You've got a screen that's so packed with lines and squiggles and different indicators that you can barely even see the price anymore. A lot of traders start out right here. They think that more information is going to lead to better decisions, but honestly, most of the time it just leads to confusion. You just end up feeling stuck. But what if I told you the secret wasn't about adding more stuff to your chart, but about taking things away? What if the price chart, just by itself, already has all the information you could possibly need? Well, there is a much simpler, more direct way to get in tune with the market. Okay, so let's really dive into this whole problem. Let's call it indicator overload. It's where so many of us start. But the thing is, it's kind of built on a shaky foundation. Here's the deal. Almost all of those common indicators, things like moving averages, the RSI, they're all lagging. They're really just fancy math equations based on what's already happened. It's like trying to drive your car by looking only in the rearview mirror. You're always just reacting to the past instead of responding to what's happening right now. So, what's the alternative then? Well, it's a completely different way of thinking. It's a move toward what we can call the clean chart philosophy, and it's all about choosing clarity over complexity. And this whole philosophy really comes to life with price action trading. At its core, it's the skill of reading the raw, unfiltered price movements right on the chart. It's about understanding the story the market is telling, like who's in control right now? Is it the buyers or the sellers? And where might the price be headed next? And this is the key principle that makes it all so powerful. The idea is that every single piece of information out there, from a big news announcement to the quiet moves of giant institutions, it's all reflected instantly in one place, the price. So when you learn to read the price, you're pretty much reading the market's collective mind. How cool is that? And this chart just lays out the difference perfectly. With indicator trading, your data is always secondhand. It's always lagging. Your chart gets super cluttered and you're stuck interpreting what all these different signals might mean. But with price action, your data is direct. It's happening right now. Your chart is clean, and your decisions are based on simple, direct observation. It's a world of difference. Okay, so how do we actually learn to read this story? Well, I want you to think of it like you're learning a new language. You have to understand the basic grammar and vocabulary before you can really become fluent. So the grammar of the market is what we call its structure. And this is just the pattern of peaks and valleys, or as traders call them, swing highs and swing lows, that the price makes as it moves along. This structure tells you the single most important thing you need to know: what's the current trend? And this structure usually builds one of two main trends. First, you've got your uptrend. This is a really clear rhythm of price making a new high, pulling back a little, and then making an even higher high. It's a clear sign that the buyers are in charge. And then, of course, you have the downtrend, which is the exact opposite. Price makes a series of lower highs and lower lows, telling us the sellers are running the show. See, it's that simple, clean, and direct. Now, this is where it gets really, really interesting. These trends tell a story, especially when they start to change. Let's look at a classic trend reversal. It starts with a nice, healthy uptrend, right? That's step one. Then, in step two, you see the momentum starting to fade. The price just can't quite push up to make a new high. But the big moment, the climax of this whole story, is step three, the break of structure, or BOS. This is where the price smashes through the old pattern by making a lower low. That's your signal. The old trend is probably over, and a brand new one might be starting. So if market structure is the grammar, what's the vocabulary? Well, these are specific candlestick patterns. Think of them like keywords or phrases that give us big clues about where the market might be turning. One of the most powerful signals you can learn is the pin bar. You can spot it easily. It's a candle with a really small body and a long tail, or wick, and its name kind of gives away what it does. It shows that the price moved to a certain level and then got sharply pinned back. It's a sign of rejection. Every pin bar tells a tiny story of a battle. That long wick, that's a failed attack. Either buyers or sellers tried their best to push the market, but the other side just slammed the door shut, forcing the price all the way back to where it started. It's a really powerful signal that a certain price level is not being accepted. Our next keyword is the inside bar. This pattern shows up when one candle's entire range, its high and its low, is completely contained inside the range of the candle right before it. It basically represents a pause, a moment of indecision in the market. I want you to think of an inside bar as the market coiling a spring. It's a time of low energy, low volatility. But just like a coiled spring, this quiet period often comes right before a huge explosion of energy, a big breakout move. So when you see one, it's a signal to start paying very close attention. Now, this is absolutely crucial. Just spotting one of these patterns isn't enough. The pros know that where a signal appears is just as important as the signal itself. They're looking for these signals to show up at confluent zones, places where a bunch of factors all line up. For instance, a pin bar that forms right at a key support level, an area where prices bounced before, that's a high probability setup. But that same pin bar floating in the middle of nowhere, it means almost nothing. Context is everything. And that really brings us to the final and maybe the most important piece of the puzzle. This isn't just about memorizing patterns, it's about weaving all this information together to see the bigger story. You see, the really great traders, they're always seeing the big picture. They're asking questions like, what's the overall market structure telling me? Or is this pin bar forming at a major demand zone? Does this all line up with a bigger trend on the daily chart? They know how to put the vocabulary into the context of the grammar to read the full story. And to help you get there, here are some really common mistakes you want to avoid. First, don't trade patterns in a vacuum. Second, try to avoid the crazy noise of the super short time frames. Third, if the chart isn't clear, just do nothing. Seriously, patience is a strategy. And finally, always respect the trend on the higher time frames. And just like that, we've come full circle. The whole point of all of this is to find clarity. By getting rid of the clutter, you let your focus sharpen on the one thing that actually matters, the price itself, and the story it's telling you moment by moment. So I'll just leave you with this final thought. The market is always talking. It's constantly telling a story of supply and demand, of fear and greed. Price action trading gives you the tools to finally understand that language. The chart tells the story, but the real question is, are you ready to become a fluent reader?